Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly discussion of current market conditions, go over CPI, PPI data, go over the bank earnings, and what to expect short-term, medium-term, and long-term in the market, key levels, and dealer positioning, and many other topics. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. For those of you who are new, the difference between Tradespoon and maybe other subscriptions out there is that we're kind of doing both. We're very heavily invested into artificial intelligence, technology, and neural network, right? We have everything is custom software. We have our own models. We have a team of brilliant financial engineers that are building new models and existing models and enhancing them. And on the other hand, they actually take these signals on a daily basis, and we have live trading room where I trade these signals, right, using stock and options, stocks and ETFs. So that's the difference. I think, you know, usually it's either you have ex market makers or professional traders, but they don't have proprietary technology, or you have someone who has proprietary technology, but they don't trade those signals. So I think that's the unique proposition. And I've been doing that for over 20 years. Disclosures are very important. Trading stock and options involve risk. If you're new to trading stock or options, I encourage you to visit this link, optionstrading.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Before we jump into a trading plan, let's talk about current market conditions and see what to expect next as the inflation data is subsiding. And I guess depending who you talk to, right? So there are different points of view. So we had CPI data yesterday that came in better than expected, right? 3.0. Expectation was 3.0 year over year. Core CPI also came in 0.1, and consumer price index was negative. I think first time, I forgot what maybe 2 years or 3 years. So first time CPI came in as negative. So you have very sharp rally yesterday on the results from small caps, right? From small caps, right? So anything that's interest rate sensitive, small caps, silver, regional banks, treasuries have TLT has rallied significantly on subsiding of the inflation. Today we had producer price index a little bit different, right? Producer price index actually went up higher than expected, 0.2. Here I think it was PPI year over year, I think it was 3.2, I believe. Expectation was 3.1. So a little bit different point of view. Small caps, whether harder or better, they're breaking out, right? You have a pretty large volume yesterday on CPI. Today is probably going to be another large volume on IWM, and you have this sharp rotation away from the mega cap technology stocks and the winners of the past 2 years to these underperformers, whether it's a small cap, I didn't check mid cap, I assume it's a similar price pattern, yeah. So small caps, mid caps are finally participating. We're finally having a broadening of the market rally because it was just an NVIDIA and Microsoft and a handful of other stocks that were leading the market, and we were, you know, at 30%, right? We were at 30% lows when it comes to participation, and now we are at 60% of stocks are trading above 50-day moving average. We have a sharp rally on that news. So overall, that's positive news for NVIDIAs of the world. I mean, I don't think there's anything destructive, but we had a sharp pullback in NVIDIA, Tesla, Microsoft, kind of all in the same boat, right? All in the same boat, you have a sharp reversal. Is that 1 day or is it 2 days? Is that the new trend? That's been discussion for the past, you know, at least a year, maybe even a year and a half. We've had these rotations, but still, as earnings unfold and Microsoft and NVIDIA are going to start announcing earnings, and TSM, Taiwan Semiconductors next week. How's Taiwan Semiconductors doing? Heading into, yeah, so you do have reversal. It's sketchy, it's, you know, recovering most of its losses, but too early to tell, right? Too early to tell. we've had this rotation, these rumors. They kind of didn't last that long, but again, it doesn't matter what you think. What matters is what you see. And as long as you see that small caps are above this breakout 210 level, then this rotation has more room. If this is a false breakout and we drop below 210 next week on the earnings, right? We have earnings, we can't forget earnings, then, then it's a similar breakout that we had here in March. Right, everybody got so excited about IWM, then the next 3 weeks we had a sharp pullback. But it's still a pattern of higher highs and higher lows, and I think medium term, long term, small caps should start at least catching up to spiders, and I think they're actually going to outperform. So that's the major move in the past couple of weeks. Everybody's talking about elections, right? Elections in Europe. France, Germany, that's out of the way, that uncertainty is removed. Everybody also talking about, what else are they talking about? Dollar, right? Everybody talks about Japanese yen, trillions of yens has been stimulated to kind of, stop the sell-off in Japanese yen. So far, it hasn't been very successful, but nonetheless, this is an uptick. We'll see if this is finally the bottom. Too early to tell. But dollar did pull back. You have a sharp pullback in the dollar, which is bullish for the market. And 10-year yield, sharp pullback in 10-year yield. We had marginal new lows, 4.17. We need to follow through, right? If next week yield drops to 4, that would be the win for the bulls and for small caps, right? Maybe not for NASDAQ stocks, but for interest-sensitive sectors, that should be a win. High yield is stable, continues to grind higher at 2024 high. That's positive for the bulls, right? So there's no distress in the market. All the rumors of regional banks failure due to all the debt that has to be coming due, that's kind of behind us. And at least for now, there is no distress in the debt market. VIX complacent, back to 12. Value stocks are up, QQQ is up, semiconductors are rebounding from yesterday's sell-off. Spiders are up, small caps are up. Broad base rally, at least today. And it doesn't look like people are selling off. AMET is up, Nvidia, and Google, Amazon maybe not as much, but we do have a rebound in some of the mega cap technology stocks as well. AMET is recovering. So earnings, right? We just had earnings, and so far, Delta Airline got, strikeout, right? 10% down, 2 standard deviation move. Wells Fargo strikeout, 2% standard deviation move. We talked about Wells Fargo yesterday, the estimated move. So we're estimated expected move for Wells Fargo was 4%, right? $2. 2 standard deviation would be $4, right? And we've seen a large position in Wells Fargo at 55 strike, right? At 55, 56 strike. There was not enough premium at 55. I sold 56. I sold iron condor, right? So the question was, do you want to be long volatility? Do you want to be short volatility for Wells Fargo? Because ValSkew, because of the ValSkew was positive, right? ValSkew was positive. There was a high demand for buying the puts, hedging the position puts, and selling calls. So the idea was that we're not going to break 566, 555 level, and we're not going to break 65 level. So I decided to do iron condor, right? Iron condor, and same setup was in JP Morgan, right? In Citigroup, they're all down, not as sharp as Wells Fargo. JP Morgan had a very strong earnings, but similar reaction, not as big of a reaction, but for the banks in general, similar reaction to last earnings, right? JP Morgan last earnings had a sharp pullback, and then buyers said, well, this is good enough, and then we made new highs into the next earnings season. It's not as precipitous, but similar reaction. Wells Fargo had opposite reaction. They actually rallied last earnings, and then they sold off, right? Kind of opposite of JP Morgan, and now they're weak. So Wells Fargo is definitely a weaker stock. We'll see how Bank of America does next week, and Citigroup is also, you know, pretty sharp pullback. So you can see Wells Fargo is trading between 55 and 56 level, right? 55.60, 56.65. So position, dealer position is important, right? Because this is where dealers are long gamma, and as we are getting to close to 55, dealers have to forced to buy stock, right? So when you see kind of a high demand for puts, high demand for calls, and the vol skew is above that 0.5, that gamma positive, right? You have gamma positive gamma, sorry. Dealers are long gamma on calls, they're long gamma on puts, right? This is negative, this is positive. So that means as we get into these strike prices, whether it's 55 or 56, right? 50, in terms of gamma exposure, 56, 55, this is where dealers are forced to buy. And you know, we're still trading at that 56 level, right? So that's Iron Condor. It was a losing trade, small loss, 10 cents. So I collected 20 cents, closed it for 30 cents. You know, I mean, it's still trading at 55.90. I mean, it could gravitate toward 55. A lot of depends on the market. Market is, at least as of right now, up, right? The next sell-off is basically flat. So then the question is, what's next, right? What is next? And what is next in terms of the model? Let's look at the model. So if I looked at the Tradespoon model, this is again neural network. It trains and learns on the data and makes inferences, right? Just like ChatGPT, same idea. And you look at the 6 months prediction based on the learning data. Still positive trend, not as strong as it was in March and April, but nonetheless, still medium-term, long-term trend is intact. That's what the model is telling you. And on the negative surprise, we could reach 540, 545. That's the gap from the June CPI. Right now, I think for the most part, it's the inflation data that drives market, not so much as earnings, because earnings expectations are very high, and you know the bar is set very high. But what continues to propel the market is inflation data. So negative surprise, we probably, if we get back to the levels of last June CPI data, the 50-day moving average, 540, 545, that's a strong support. We could see 576, right? We're already at 560, and it's not that far. It all depends on earnings season and inflation data, right? And Powell's speech. So 540, that's the gap, right? That's the gap from the last inflation data. This time inflation data, it's flat, right? So 540 and then 575. So there's three scenarios, you know, as earnings season unfolds, right? We're kind of in the first inning of that process, but in the next 2 to 3 weeks, we'll have the rest of the stocks. We have one scenario where we break 575 and the model, you know, sometimes it's, you know, just because model says 575, that doesn't mean 575. Or if we look at the positioning, there's some call selling at 575, not a lot. So that's one choice. We're going above 575 from the spider. Second, we are trading between 575 and 540. That's the second scenario that's possible based on the distribution of these outcomes. And scenario number 3, we trade below 540. Right. So and you can look at dealer positioning, right? Same strategy, or you can look at the historical volatility, right? You can look at the 50-day standard deviation, and you'll see that support is also 540, somewhere between 540, 545, and 575, 560, 570. So how many of you say, one, Vlad, earnings season is strong, employment is strong, there's no signs of distress, high yield is stable, and small caps are taking off, we have wide participation, we're gonna take out 575, right? Scenario number 1. Scenario number 2, you know, for every positive news, you know, Bitcoin is falling apart, it's staying below 60,000. That has been a good proxy for risk taking, so it's kind of risk off. ARK Innovation still lagging, regional banks are still lagging, so maybe it's just 2. And 3, you know, we have elections, a lot of uncertainty about the elections. We still have geopolitical risks, and you know, some regional banks could default. in August, September, and then we have scenario number 3. All right. How many of you say 1? How many of you say 2, 3? Don, Ernest, Mark, Martin, Rob, T, Tony, Trader, Mark, Steve, Bob, Fred. Option number 2. We're trading in the range between 540 and 575. Thank you, Trader. Anyone else? Anyone else? So you can see in terms of July 19th and August 16th. Well, July 19th is next week, so there's 1 week. So you do have support at 540 and 530. So there's not much support till 540. So you could have this sharp 3% drop because it's not positioned. And on the upside, again, 575, largest position in terms of short calls. Anyone else? Option 1, Don thinks we're going to take out the highs, 575. There's not a lot of call selling, so there's not that much overhead resistance. I agree. And then in terms of historical moves, probability calculators, spiders. Model for spiders, basically 3 lower, 1 higher. Usually from seasonality point of view, we have strong July, which we already experienced 2 weeks into it, and then it kind of flattens, and then in August we have a pullback, right, from seasonality point of view. And from probability calculator, historical 545, 567, right? So very similar marks based on different calculations. Mark, general looks on bank stocks and Visa. Well, so far banks are not doing great, right? Banks are not doing great. So the bar is set high, right? They're at 52-week high, all-time highs. So the bar is set high. JP Morgan trade below this breakout level. If it's continues to deteriorate, then it's a problem. Interest rates is dropping, right? You do have, you still have. Sorry about that. Interest. So you still have flattening of the yield curve, right? So 2-year yield is still greater than 10 and 30, but the differential is dropping, right? We used to have 200 basis points, 100 basis points. For all practical purposes, it's almost the same. So if the 2-year continues to decelerate, right, and the yield curve, instead of this becomes this, right? This is good for the banks. In theory, this is good for the banks. But that news has already been factored into the price action, and for now, at least initial reaction on banks is negative. That doesn't mean that in the next 2 weeks people are just going to forget about earnings and step in, right? JP Morgan had great earnings. I don't think I found anything negative about their earnings, except that what does he see on the Diamond? Said that inflation is going to stay higher for longer, but he's been giving these negative subtitles, and people usually tend to ignore them afterwards. But nonetheless, it doesn't matter. For now, it's still an uptrend, but it's consolidating. And the longer we stay above this breakout level, if we stay below that level and the price action deteriorates, that would be negative for the banks. Visa, MasterCard, hard to predict. right? It's hard to predict. They're oversold. Visa, MasterCard is oversold. American Express announcing a lot of it, but American Express, you know, I think they have more exposure to businesses, right, as opposed to retail client base. So American Express is doing good, better. Synchrony Financial, I've been trading Synchrony Financial, right? That signal is being generated by the model, by the you know, 3 of our models that we use. So Active Trader, Weekly Trader, Synchrony Financial has been one of the stocks, right? That the model is generating. Today was Nucor, right? Strong price action in Nucor, strong price action in Lennar, right? The home builders are leading the way on the reaction to the CPI data. So you have a follow through in Nucor and you have follow through in Lennar, right? So the home builders are rebounding, Lennar rebounding. Visa and MasterCard, it depends on earnings, right? It just depends on earnings. They're going to announce earnings in the next 11 days. On one hand, they're oversold. In any positive surprise, you could have a price action like Lennar, right? But you need a catalyst. So either consumer is very strong and they're selling, and they're, you know, and they're spending a lot of money, but you need some kind of a catalyst to have this vertical move from the 200-day moving average. And then Delta, you know, Delta Airline was the same setup, right? It's extremely oversold. It's a 200-day moving average. Everybody's flying, you know, record season. And July 4th was a record, you know, travel in terms of airline, but, you know, they sold off 2 standard deviation. Why? You know, forward guidance was, you know, less than expected. Input costs are higher than expected, and you move into the downside. So predicting earnings is very difficult, what the outcome of the earnings are. And just because you think that everybody's traveling, that doesn't mean that the stock is going to go up. So going into the earnings, if you have Visa, you know, I propose to hedge, right? Because it could go up 2 standard deviations, right? You can go and say, what's the expected move for Visa? So for now, we don't have rise in volatility. We don't have a rise in volatility, but about $15, right? $15 on Visa, 5%. Usually moves 5%. $15 to the upside, $15 to the downside. So it could be a $250 stock, right? Or it could be to $80 stock. But just because it's oversold, that doesn't mean it's going to bounce. Right? You need a catalyst, and the catalyst, it's either inflation data that hasn't moved the Visa yet, or earnings. So most likely it'll react to earnings. Thank you, Mark. Any other questions? All right, so in terms of Elite Circle, there are different trades, right? Wells Fargo, I'm doing option trades and stock trades. So you have an example of Iron Condor, right? You have an example of Iron Condor where I trade options. We went over the silver NVO. I've been long silver NVO and FXI. China is moving on the interest rates, right? So you had a large vertical move in China. So I trimmed my position because there is a long-term overhead resistance around 27.41. So my thought process either we either trim if you cannot break through this level, right? Because this is going back to, I think, November of 2023 high. And then buy again at 26, or if it continues, I still have this another position. So this is an example of FXI, and then I added to silver. Right? I added the silver on the pullback because this uptrend is intact, 50-day moving average is intact. So I'm adding to the silver position. So you have example of options trades. You have an example of option spread trades. The question is, what is the, how are you positioning? And we're giving you different choices. I went over active trader, right? The way you have stock and option ideas like Nucor, you can trade stock, or you can actually trade options with suggested entry prices, right? Entry 1, entry 2. On short-term trading, I usually look for 1% gain, right? On weekly traded 2.5%, on monthly trader 5%. But these are the models with long and short signals, and you can trade them. Like example of Nucor, suggested entry price either 158 or 156, right? The Nucor gap. A lot of people ask questions about, well, Vlad, what if it never, what if it opened and gapped up, right? And it never reached that level. All right, gapped up, never reached this level. So you have two choices. You can just, usually I wait 15 minutes, right? I wait 5 minutes, 10 minutes, 15 minutes. I encourage you to look at the live trading room. And then somewhere around this area I would trade, right? Around 159. Suggested entry price is 158.96. So we get a question, well, it never reached 158.96. What do I do? The answer is there is no universal answer, right? You have to look at the market conditions. You have to look at the news. So if you're asking the purpose of these signals is what you need to be trading. But this is today my favorite expression was this is not a stock market. This is a market of stocks, right? So the idea is that you have to pick stocks based on whatever criteria you want. So this is a market of stocks, not a stock market. So market of stocks, I love that expression, is that you have signals and then you need to know what to trade. You already have a trading plan. You know how to do short-term and medium-term trading. If you're not sure, if you knew or you're not sure how to trade these signals, then I encourage you to, instead of signing up for the PIC services, sign up for Elite service. This is where you get signals, right? You can enter your phone number and get an SMS message, right? You can log in and see my orders and positions live, right? And then during live trading room, I explain what to do if there's a gap up, gap down, or spike in volatility, or short volatility, short gamma. We can have a conversation in a context, right? So then I encourage you to sign up for Elite Circle. Any other questions before we depart? All right, guys, that's all I have for today. Thank you very much. You've been a great audience. I appreciate your time commitment. Thank you. We'll see you at the closing bell or Monday morning. Thank you.